That's a fair point indeed. Just hold your thoughts, everybody, there, because we've got Jayant Sinha, Minister of State for Finance, speaking at an event where we are exclusive media partners, and it's time to get you the view from North Block.
Had done a study in the then Planning Commission where they had calculated that there was a need for $1 trillion worth of infrastructure that was necessary to build out India and to be able to support the growth that we all need. And anyone who has traveled in India or traveled in our cities for that matter knows that the requirement for infrastructure is a very, very pressing and urgent need for us. And so we really have to think very carefully about the models and the financing structures that can result in the investment necessary to make this infrastructure happen. So that is the dilemma that we face. Now today is a very exciting day because Honorable Prime Minister went through and announced the whole Smart Cities program, which includes the top 100 cities, then the Amrut program for the next 500 cities, and housing for all. This is a very important and integral part of infrastructure as well, and we are thinking very hard about exactly how we will finance this through the PPP model and through the next 5 years because of the kind of investment that we as government will be making in this. So that, of course, is something that we are pushing on as well. But more importantly, we have been focusing in the budget and thereafter in 3 other very key infrastructure areas: roads, railways, and power. And it's in these 3 infrastructure areas that in the budget and thereafter we have been working very, very hard. What I'd like to do is to explain to you what is it that we've tried to do as far as the budget and our policy making is concerned to really be able to open up new avenues for infrastructure financing. Of course, we all know infrastructure is essential for our economic growth, which is the first point that I made. But we also have to understand the current scenario where we have a large number of stalled projects, where we've had a real challenge around financing these projects, and really look at what is it that we've done differently to really get this growth forward. Now, as far as the macro economy is concerned, we are actually in relatively good shape. When we inherited the economy a year ago, as you remember, the macroeconomic situation was quite dire. And as I've said, what we had to do in the last year was to actually take the train of development, put it back on its tracks, and then convert the passenger train into a Rajdhani. But based on the work that you all are doing and the work I think we'll be able to do going forward, that Rajdhani can even become a bullet train. But that's really what we are working on right now. And if you look at any macroeconomic parameter, whether it's fiscal deficit, current account deficit, GDP growth rate, inflation, all of these parameters now are in a very healthy situation. And as Honorable Finance Minister said when he was in the US recently, we are the very rare bright spot in the global economy. And so the last year has been a year of macroeconomic consolidation and stabilization, during which we have been able to really restore macroeconomic balance to the economy. And that has now enabled us to start to really invest in infrastructure and power the economy, convert it from a Rajdhani to a bullet train. There are 3 very important reasons why this acceleration is going to happen. Number one, as you know, RBI is now cutting interest rates. We've already had 75 basis points of interest rate cuts. So we are going to see that cyclical upswing that happens when rates come down and inflation is under control. So that's the first growth driver. The second growth driver is obviously what is happening through structural reforms that we are undertaking, such as GST, enabling FDI insurance, ease of doing business, Make in India. All these structural reforms are really going to propel the economy forward. And then, and this is I think of most interest to you all, we have really made a big push as far as infrastructure through public investment is concerned. And there we have done significant amounts of budgetary support for the railways, for roads and so on, so that we can propel the economy forward. Let me focus on that aspect a little bit. In the budget, as far as infrastructure is concerned, we have really pushed on three different dimensions. First, in terms of gross budgetary support. So as far as railways and roads and ports are concerned, we have incrementally in total put 70,000 crores extra relative to last year into these infrastructure sectors. So these are gross budgetary support numbers which are directly going to go into public projects, public investment projects, where the commercial returns may not be that high, or you would not see the commercial sector investing in those areas. So that's where we are making these monies available directly from the government's budget. So that's one very important thing that we're doing. The second very important thing that we're doing through the budget and through our expenditures this year is enabling more infrastructure bonds. So we have a number of infrastructure financing agencies like NABARD, for instance, and we are enabling them to go out and issue more infrastructure bonds. And as they do that, more capital becomes available to them to be able to invest in infrastructure. So as we consider our infrastructure push in the budget, number two are the infrastructure bonds that we've opened up this year, which will enable people to raise more capital and then go and invest it like NABARD can do it. And then the third is the National Infrastructure Fund that we are in the process of putting together right now. And in the National Infrastructure Fund, what we've said in the budget is that we're going to allocate 20,000 crores every year for the National Infrastructure Investment Fund. By making 20,000 crores available every year through this fund, it's possible for us to then lever that up 3, 4, 5 times, and therefore have a corpus every year of maybe 60, 70, 80,000, 1 lakh crores worth of funds available to invest. Now, I explained very clearly that what we're doing through the budget is meant for those projects that are public projects, that are not commercially viable projects, or for viability gap funding, but where we need to basically invest as a public good. The National Infrastructure Fund is intended to make investments in commercially viable projects, which, because of long gestation periods, because in some ways some of our infrastructure companies are tapped out right now, we don't have the funding available. So while the budgetary support is intended for projects that will find it difficult to get commercial financing, the idea of the National Infrastructure Fund is to be able to take those long gestation, high risk development projects that the private sector will find difficult to support and has found difficult to support, and really be able to get them off the ground. So that is the thinking around the National Infrastructure Fund. It's, we think, a very innovative idea. We've put a lot of capital into that, the 20,000 crores per year that I spoke about, which will enable us to have a big pool of capital available for these very important commercially viable projects. And they could be projects such as large highway projects. They could be big convention centers that get built. They could be bridges that get built. They could be airports. They could be large-scale city development projects. All of these projects, there are a whole host of infrastructure areas. So the National Infrastructure Fund will be able to look at all of these different projects and be able to provide them the appropriate financing. And because the National Infrastructure Fund will be supporting these large-scale projects, which are long gestation projects, high development risk, but ultimately commercially viable, we think that not only will we be able to use both the equity and the debt that the National Infrastructure Fund will have, but at that SPV level, because the National Infrastructure Fund will become the anchor investor in those projects, we'll be able to attract significant amounts of external capital as well. And in the last few months, I have had the chance to travel and meet with people from the Middle East, from Australia, from Japan, from Canada, and there is very significant interest in being able to partner with the National Infrastructure Fund and to be able to co-invest in these kinds of projects, because people feel that if a government agency is identifying these large-scale projects and is putting its money into these projects, these are likely to be very high-quality projects, and they would very much like to be partnering with us and co-investing in these projects. So to just conclude and summarize, as I said, our goal, of course, is to be able to propel the economy forward in a sustainable way for a long period of time. We absolutely need high-quality infrastructure to do that. What we've tried to do in the budget this time is to be able to provide the mechanisms through gross budgetary support, infrastructure bonds, and the National Infrastructure Project to be able to identify and really work on this full range of infrastructure so that we can really get public investment moving, we can get the economy moving as a result of that. And as public investment starts to happen and we spend on steel and cement and construction work and so on, capital goods equipment, obviously that enables us to be able to then get the private investment cycle going as well. So that is the overall strategy. We think we've got now the mechanisms in place through the budget, through the infrastructure bonds and the National Infrastructure Fund to be able to provide financing for all high quality projects, whether they generate very high public returns or whether they generate just high economic returns by themselves, to really make a big push as far as infrastructure financing is concerned. So very much look forward to partnering with you and with your institutions to get this infrastructure built out. Obviously, as you know, it's a very urgent and important need for India. Thank you very much.